I'm going to show you how we utilise support and resistance to bank over £4,000 in profit from our exit and our entry criteria. I'm going to be explaining exactly how you can utilise support and resistance within your trading strategy and how to apply it to the markets. So stay tuned to see exactly how I trade using support and resistance. Support and resistance is a great technical analysis tool that we can utilise within the markets, and it's just about understanding how we can apply that when we're trading. But most importantly, let's have a look at the history behind support and resistance and technical analysis and exactly where on earth it came from. And I can tell you now, the history stems back well over 200 years. The principle of technical analysis have been utilised and developed by utilising over 200 plus years of financial market data. Some of the early aspects behind technical analysis was brought up and founded in no other than the place that we all love, Amsterdam. But not for those reasons, for other reasons. Some aspects of technical analysis began to appear in Amsterdam-based merchant Joseph de la Vega's account of the Dutch financial markets in the 17th century. On top of this, in Asia, technical analysis is said to be a method developed by Homer Manusha during the 18th century, which evolved into the use of candlestick techniques, and today is overall formed as part of our charting tool and what we utilize to digest and take information from the markets to decide where is best to enter when we're trading on a short-term time frame. And later on, the history really developed in America with Charles Dow, as you can imagine from the name, was later one of the founders of the Dow Jones. And this is where they analyzed lots of stock market data. So Charles Dow published some of his conclusions in editorials for the Wall Street Journal, and he believed that patterns and business cycles could possibly be found in this data, a concept later known as the Dow Theory. Now that you know where technical analysis and support and resistance came from, in this day and age, how we apply it to our charts, technical analysis is one of the final parts of our trading strategy. When we start trading, we want to have a great understanding of fundamental analysis and the cycles that are happening within the markets. But when we come down to technical analysis, it helps us with our entry criteria. So we can use these levels as points of interest within the markets for either entering the market or potentially exiting the market. So I'm going to walk you through and show exactly what we look for when we trade this way. So when we look at support and resistance, I've got a great example set up on this chart. The chart that we're now looking at is pound against US dollar. We're on the 1 hourly chart, and I thought I may as well run through it, seeing as I've already taken 2 trades that have been profitable from trading. The first one that we can see up here was taken on the 15-minute time frame, and I'll talk a little bit more on why I exited that. And the second one was taken on the 1 hour time frame, which is what we're currently on, and why I exited that as well. Now this falls really in line with what we're talking about how to utilize support and resistance. So if I was to create a checklist, obviously my first checklist that we're looking at is fundamentals within the marketplace. So breaking down the fundamentals of the economy, what we look for, which direction is this currency pair going to trend, and then overall I take that fundamental analysis and then I look at the technical perspective. So from a technical perspective, we covered it in our last video when we was talking about Forex trading strategies, which was about using multiple time frame analysis to get the trend in line with your shorter time frame direction. By doing this, we add lots of multiples within our favor to capitalize on the overall sentiment of the market. So once we have that position, we then want to utilize tools like support and resistance. So support and resistance is great. So when we trade with support and resistance, a lot of people try to overcomplicate this. They draw their support and resistance on the daily time frame, then the 4 hourly, then the 1 hourly, and then all the way down to the 5 minutes. And let's be honest, it just makes your chart completely messy and not very easy to sort of decipher. So what we're going to do is we're going to just apply the support and resistance on the time frames that we're trading. This allows us to simplify our trading and keep this method as simple as we possibly can. So when we do this, let's start by drawing the highs and the lows that we can see within the markets. So we're looking for areas in the market where there's multiple touches, and this is usually at previous highs when we start breaking this down, which you can see here. So you can see it touched here. This was the first form of the high, the second form of the high, and then the third form of the high over here. The more touches that you get and wicks that touch off of this, not necessarily break through it, are areas that we want to analyze and break down further. So now let's have a look at the next level. The next level is quite clearly around here. And so if we're to look at this area of interest, you can see we've had a bounce here, a bounce here, a bounce here, and it slowly broke through this level over here. So let's zoom out, see if we can draw anything further on this chart to give us a better understanding of where the markets might be going. You can see that we've got another one here, touching the highs here. We might be able to get another level in off of here as well. So you can see here, look, touched, rejected, broke through it, came back down, tested it, and then moved on to the upside. My overall fundamental outlook on pound against the dollar is bullish. So I'm overall currently looking for buys in this economic outlook that I have from a fundamental perspective. So drawing these levels in will help me find potential entry points, and then when I'm in a trade, areas that I should be cautious of for exiting. So when we look at this on the chart here, you can see that ultimately when resistance is broken and the market comes back down, it tends to test previous highs. You can see that here. And the market carries on, rallies up, back to the previous high here. And then guess what? It rejects it, stalls, slows down, and then finally breaks up through that level. We don't really get a pullback to a support level all the way back until down here. So if I'm to walk through my trade here on the 1 hour time frame, you can see that we waited for a pullback, the market pulled back down to this previous sort of consolidation period and this previous high over here. And we had some rejection and a bounce off of that, it came back down, and we had a couple of buying bars. So for me, this is an area of interest because I want to buy into pound against the US dollar. I think it's a valuable currency and I'm looking for a good area to enter. Now with this slowdown around the support level, it adds an extra factor into my overall trading strategy for being able to enter. So I entered into the markets here, and ultimately I know that the next place that price might stall is the previous high. And guess what? Price goes up, touches the previous high, stalls and sells off. For me, I exited here with a 2-to-1. You can see that I achieved a £2,000 profit on this trade from a £1,000 risk. So that gave me a 2-to-1. With my stop loss and placement, I only needed it to achieve this level, which was just before the previous consolidation, to be able to get out at my 2-to-1. Ultimately, if I got stopped out, the trade would have gone down and hit my stop loss, which would have broken this support level, and ultimately I wouldn't have then been interested in that trade. Now from a reflection point of view, you can see that if the trader was to have held this trade for the long haul, you can see that actually it went up and rejected that previous high, which is resistance. This is the form of resistance that we want to be careful of, and if price breaks through that, then we might see further momentum to the upside. It stalls and sells off. So being able to identify support and resistance lines within your chart is super valuable to you when you're trading. And you can see that in this perfect example, even here on this 15-minute trade. Let me zoom into that so we can break that down a bit further. So here we're looking at a smaller time frame on the 15 minutes, and you can see how price has rallied up quite aggressively. And I'm like, well, where's it going to pull back to? Well, the first pullback. So if we draw that in on here, you can see that how this was the pullback before it then rallied up again, and it comes back down and stalls around that level. So entering into the markets and targeting the previous high, hit that and then sold back off again. So being able to utilize the lows of the swings and the highs within the markets are great starting points for you to be able to put on support and resistance levels. So to summarize utilizing support and resistance, the first place that you want to look at is putting those on the highs and the lows of the markets. Try to stick to the current time frame that you're trading on to simplify this. You can see how that we went from the 1 hour down to the 15 minutes. There was a new support level that we needed to plot on there that highlighted the potential area for interest. So make sure that you keep it simple by putting the support levels on the time frame that you're trading. Remember that technical analysis should be the last thing that you're focused on when you're creating your Forex trading strategy, because overall the markets move based on fundamental outcomes of the economy and the fundamental news that moves the market. There are some people out there that only trade technical analysis, but I would say that they're only trading with half of the full picture of what's happening within the markets. Fundamental analysis is key, such as interest rates, GDP from an economy, whether we've got monetary or fiscal policy happening at this moment in time. We look at employment figures and things like that. So just remember that technical analysis is such a small aspect to this, and it should really only be used for the entry and exit criteria, not the overall outlook of where you think the market is going. So if you want to learn more exactly how to master the Forex markets from a profiting perspective, understanding fundamental and technicals, you can check out my course in the description. So guys, if you've enjoyed this video of exactly how to utilize support and resistance within your trading strategy, then make sure we hit that like and subscribe. I'm going to be covering more Forex trading strategies. And most importantly, get in the comments if you agree with what I'm saying.